Mr. BJ Arun, CEO of July Systems. BJ. Ritesh Agarwal, OYO. Ritesh, how are you? Welcome. Ms. Radhika Agarwal of Shop Clues. Radhika. Mr. Naveen Tewari, CEO co-founder of Inmobi. Mr. Sachin Bansal, co-founder and CEO of Flipkart. And finally, I have the honor of inviting on stage, as our moderator for this session, Ms. Shri Jayant Sinha, Minister of Finance, or State for Finance.
Good evening, everyone. It's wonderful to be here and to see the energy and excitement in the room. And I'm also very honored to have such an eminent panel with a wonderful set of entrepreneurs and founders who need absolutely no introduction. And I think we got a great segue into this session from the previous session when Nikesh was asked about how to balance investment, scaling up of businesses, and actually making sure that the businesses that are being created by all of you are going to be real businesses in the long run. And so what we want to do in this panel is really to explore this set of issues. Since time is limited and the Honorable Prime Minister will be joining us shortly, what I thought might be most interesting is to actually sharpen this discussion on three very key issues. And I'm speaking from someone who was himself a venture capitalist and helped fund companies like Quicker, Treehouse, D-Light, and Daily Hunt. So I've seen these situations, I've seen these issues in real life, and to have such an eminent panel discussing these issues with us, I think is a real treat for us this evening. So the three questions I thought I would pose to all of them, and we'll do a go around. I'll pose the question and then they can each give a 1 or 2 minute answer, and then we can go on to the next question. And we'll start from my left and go on to my right. So the first question I'd like to ask them is, how do you balance the funding side of the business? And of course, some of them have raised, $1 billion or more with the actual scaling of the business itself. How does that work in terms of not getting distracted? So that's question number one. Question number two, and I think this is a question maybe all of you want to know about, is there a bubble right now as far as the Indian startup ecosystem is concerned? Is there a bubble? And then number three, the question I'd like to ask all of them, and this is something that in my role today I'm keenly interested in, is are you going to list in India or not? So are you going to list in India or not? I really want to know the answer to that question. So let me start with the first question, which is how do you balance the tension between raising capital and actually building a great business? And I'd like to start on my left-hand side, please. Arun.
Thank you, Jayant. I'm BJ Arun. I'm CEO of July Systems, which is headquartered in the San Francisco Bay Area, but we have a team in Bangalore as well. So to your question about balancing between how much money you raise and spend versus how much it really is, I think the entrepreneur needs to determine whether the amount of money they're raising is sufficient for them to scale the business or not. In the Silicon Valley, we have seen time and again that when people get funded with too much money, it's actually a recipe for disaster. You lose the fiscal discipline, and people just, we've seen that in the whole dot-com boom. And you kind of alluded to whether are we in a bubble again. Those of us who've been around for long enough, 1999-2000, we pretty much saw the exact same scenario happen in the Silicon Valley, and we're seeing the same thing play out in India again today. So I actually would, at this risk of sounding like a wet blanket, like to caution my fellow entrepreneurs that not everybody needs to necessarily become a unicorn. It is okay to be an entrepreneur, to have a startup, to have 50 lakhs, 1 crore, 5 crore business, and that's perfectly fine as long as you're making money at the end of it. So you don't have to be worth $20 billion. You don't necessarily have to list your company. You just have to make a profit running a business.
Thanks, Arun. Very, very interesting question, Jan. Thank you. I'm Radhika Agarwal. I'm the co-founder of shopclues.com. We are, I don't know if it's a good thing or not, but India's latest unicorn. But most important over there, I think for us to remember is the appetite of a horse is very different from the appetite of an elephant. What are you truly building? For us, we believe that we've been a lean, mean machine pretty much from day one. Travis showed a beautiful video of these women running the 600-meter race, and she falls down and she keeps running after that. And I feel at Shop Cruise, that's what we've done. We've had a couple of falls, we've had a couple of drop-offs, but our focus on being on frugality, on being very, very capital efficient has always worked well. And that's what we want to continue to do. Now, how much time do you really spend on the funding part of it? What is the valuation part of it? Again, back to what Nikesh said, you're building a company that has to provide value to the consumers. If you're creating value, the valuation will follow. And I think that's been the mantra for us, and we hope to carry forward with that. Thanks.
Yeah, I think, thanks Jayant for the question. I think I echo the sentiment of what Radhika shared.
So, Sachin, let me just sharpen that question a little bit, which is, I know that the mantra that everybody repeats, which is let's build a great business and the valuations will come. That's what everybody sort of repeats all the time. But there are competitive effects in the sense that if your competitor is raising a lot of money, do you feel a pressure that you also need to raise a lot of money? If Amazon comes in and says we're going to have a blank, check here for India, what does that mean for Flipkart? And then how do you then balance that out with actually building a business that's going to compete with Amazon?
No, I think it's important to acknowledge the basic fact that money follows great businesses. I mean, if you don't have great businesses, if you don't have a good set of metrics, if you don't have a healthy business, then money doesn't come to you. Unless you have dumb investors who don't understand the business at all, which happens once in a while, but it's unhealthy as well. We shouldn't, people shouldn't do that. I think at Flipkart we have always tried to find investors who understand the business, because if you try and go after money which doesn't understand the business models at all, you will end up in a situation where the fiscal discipline will not be there. Investors don't know what is happening, and you make a lot of mistakes. I think you need to avoid that, right? But I think to answer the specific question, you can't be. You have to, as competition heats up in the market, in any segment, any sector. Of course, the table stakes of what it takes to compete in that space goes up, and that is what we are seeing, for example, in the taxi space. Or the e-commerce space, where entry of large international players definitely has taken the stakes up, and there is a minimum set of funds that you will need to even have a meaningful play in that space. And that's true for a lot of things, right? Even in manufacturing. Now, if you want to compete with China on manufacturing, there is a minimum set of size of factories and size of end-to-end expertise that you need to be able to compete, and that requires funds. I think that's what is happening, and you need to keep that in mind.
Terrific.
Sure. Thanks, Mr. Sinha. So I'll just contextualize on.
You want to switch on your mic?
Hello.
It's on.
Yeah, I'll just contextualize. I'm the lucky guy in this audience, in this particular panel, because I have not put in any money. I'm not an entrepreneur, but I still get the high of working with an entrepreneur and with a fund. So I'm the consultant in this group. So I'll just contextualize from the way I'm putting this across. So where we see people balancing this particular challenge which is coming up is in having a clear answer to why do you need money. The topic says show me the money. That can be the same question which the investor also asks, right? So in the growth stage, I'm sure that the other panelists also would have seen the kind of funds they are marrying during the journey helps in a way bring in a kind of a balance for them, because the demands also change. I mean, we work with startups, we work with unicorns, we work with the investors as well. So where we see the balance slowly coming up is when they've got the right investor with the same mindset. I mean, Sachin mentioned about having an understanding of the business model, but the mindset to accelerate, if we are able to balance, that's when we have seen, whether it be a startup asking for a 10 crore funding or somebody raising billions, where we see a kind of a stability coming up in the system.
Terrific. Thank you. Naveen.
I think, to answer the first part of your question, I think it's absolutely very distracting to raise money. and there is no questions about it. And unfortunately, the only person who can go and raise money is the CEO or the founder. So therefore, prime time of your essentially goes into trying to raise money. Having said that, I think I don't think there is necessarily a balance that people even apply, and they shouldn't. I think if you have more money, that's brilliant, and so you should raise more money if you can get more money, because most of the time you won't get that much money if your business is not that good. So if you're getting it, you should use it. I think the caution I would put is people confuse a lot of money with success, and that you will win because you have a lot of money. I think this theory probably is being played out in India to say, can capital in effect be the only thing that can help companies win over a long period of time? I don't think in the West, at least, capital has allowed companies to win. It boils down to core product and technology and the team and the culture, etc., that allows for companies to win and build. I think that caution is the only one that I would put out to a lot of the entrepreneurs, not the caution of balance, and not the caution that whether you need to raise or not, you should raise as much as you get and as soon as you get.
Terrific. Ritesh.
Hi, I'm Ritesh. I can tell you pretty nervous and also very excited because the first time I'm with a minister who's also was a VC earlier. Guys, how many times do you see this across the world? A minister who was a venture capitalist earlier. This is, and asking questions where you almost feel like you're talking to a shareholder. This is exciting. So, Jayant, for the questions, I think first, Nikesh is an investor, and I look at him, look up to him, learning a lot of things. And one of the things that he mentioned was, if you're building a great company, capital will follow. So I think there's no way I can't, understand and believe in it. So continue building a business which we believe will revolutionize. How do we take any piece of land in the world, standardize it, and bring it online? So that's something that we deeply care about. The second thing, which is about bubble, I think while in the interim, a lot of us might think that, oh, this company is probably valued higher by 20 mil or 50 mil or one of those things. But I think in the long term, if India has 450 million travelers who get into railway trains, buses, truckers, and so on, and if we build India's largest brand of hotels, which will enable all of these places, people to find a place, there is absolute, the valuation that you're talking about is going to be nuts in comparison to what it is today. So I think, well, there'll be some fraud here and there, but if you're solving a real problem, none of this really matters.
So Ritesh, you clearly think that your valuation hasn't peaked yet, does it? I think you might still be raising funds. But let's turn to the other question, which is, are we in a bubble? Are we in a bubble as far as the Indian startup ecosystem is concerned? And if we are in a bubble, how do you think it's going to end?
This is a very, very difficult question, because when you're living through a bubble, everybody's on a high. Okay? And we were on a high in 99, 2000 during the dot-com boom. All of us were worth gazillions of dollars, and we were loving it. And if somebody came and wanted to poop on the party, we would hate him. But unfortunately, we have seen this movie before. And I think we are in a bubble. And when the bubble bursts, it's not a pretty picture. And people are going to get hurt quite badly. And particularly, I worry that a country like India, it'll be harder to recover from the burst of a bubble than it was for the United States. So that's my personal opinion.
So Radhika, are you getting ready for the bubble bursting?
I have a completely different point of view here. Indian retail is about 683, 700 billion. Indian e-commerce is 10 billion, 12 billion, depending on who you talk to. That's less than 1.5%, 2% of penetration. There is, the Indian consumer is changing fundamentally. Consumption habits are changing fundamentally. And this is going to result in value. So value is being added right now. For people who are sitting on the board over here, maybe I'm an exception, we are a much younger company, but they've created industries that have completely disrupted the way traditional industries work. And there are people sitting out there who are creating disruptions for people sitting on this panel right now. So value is being added. Valuations are fine. I think there was a small era in there when people were looking more at, and part of it is, the media is to blame for that, right? You're all, the only time we made it over the fold of the first fold of a newspaper is when there was a false news about us raising a lot of money. what is the value that we are creating? Can we talk about that? And does that actually result in valuation? So I think we have a long way to go, and don't subscribe to the same thought as Arun does.
So Sachin, you are India's, I think, most highly valued startup. What do you think about this bubble idea?
I think we need to take a step back and look at the larger picture of India. I think and see where things are. All of internet companies of India put together, I think market cap wise will be less than $50 billion or so, and it's absolutely penetration as good as any other country. Will have internet almost free like air. Life will be disrupted or changed by technology in a big way, and artificial intelligence is going to, and as in combination with mobile, is going to be a bigger disruptor, I think. And India has large problems which will be solved through technology. So if you look at the larger picture, in the next 5 to 10 years, India's internet economy will be more than $500 billion or more, and that's absolutely going to happen. And I think yes, the path to that will be shaky. There will be ups and downs. There will be mistakes. Sometimes there will be more money available. Sometimes the money will be the supply-demand equation of funds and startups will be different at different points of times. And but I think the larger picture is that India is going to go through a lot of technology transformation, and powered by mobile, and this is going to be a large space. So I think yes, but I think a larger, if you look at that picture, I would say this is not, we're still very early, and this is, and the future of some companies may be here and there, but future of internet as a whole, of course, is going to be very, very bright.
Jen, thanks. So I have a slightly different take. See, when I observe this as an independent party, what we are seeing today is a crazy convergence of sectors, right? Financial services, telecom, technology, e-commerce, converging because the end customer remains the same. So when an investor is looking at it, I mean, I actually did a diligence on somebody where the investor asked me, how amoebic is the business model? We are not used to this phrase before. When the dot-com bust happened, it was largely single-dimensional. Everybody wanted to go online and sell. But today, if you ask me, I mean, Sachin next to me, I mean, he and the others have just created an ecosystem. I don't think these guys are just retailers, right? In Bangalore, if you see, people just see delivering stuff, removing the t-shirt, wearing another t-shirt, going and delivering something else. So today, I think the valuation is also linked to this amoebic nature of the business. That's my personal view, because is it straight? It is not, because it's end of the day, what all can I serve the customer? Because the customer remains the same, whether you are a financial services company or a telecom company or an e-com company. So that's why the word bubble is a little convoluted, because it's not single dimensional to have it called a bubble, because there are multiple revenues.
Sridhar, you're giving an answer like a consultant, which is, it depends.
It depends.
We want to know whether it's a yes or a no. We are investors.
So let me conclude. So I don't think it's a bubble at all, because the kind of investments which have come in and the kind of stability these guys have brought in the system can't break.
All right. So you're going to be investing your next bonus into startups?
Not in Flipkart, but some of the smaller ones.
So I have a slightly different take. I think it's outstanding that India is in a bubble. I think it's great, because countries don't get into bubble until there is massive positive momentum around the country. And what happens is the exuberance might go up a little bit, even if needed to. But the fact is, if the bubble didn't happen, and by the way, I might even disagree with the fact that there is bubble, but I hope there is a bubble. And I hope that the bubble becomes even bigger, because there will be some casualty, but that's okay. Because the positive momentum of the bubble will basically create massive companies, a lot more money will come in, a lot more innovation will happen, a lot more disruption will happen. By the way, I know everyone you talk to in the world will always compare the bubble that India might be in to the 1999-2000 bubble of the US. But look at the fundamentals, they're completely different. Consumers are starting to pay online. Paytm is here and they can vouch for that. Flipkart's here, they can tell you that people are buying online. There are more and more phones being sold every day, day in and day out. I don't know what the latest number is, but somebody told me that we are close to 150, 160 million smartphones with close to 1 billion phones. Those number of smartphones are going to go up. People are going to get to connectivity. Probably about 500 million is what Sachin you said. 500 million more people will come online. All of these things are reality. And if that reality is there, then let it be bubble, because hopefully they will create 25 more big companies. 3 of them might go away, but that's net positive for the country.
This is amazing, Naveen. This is so similar to my views about the same. I know I was called here to talk about hotels and startups, and it's not my forte to talk about countries, but I'll draw a very interesting similarity. If you see countries across the world, the most successful countries are the ones that have gone through a major casualty. US went through the civil war, after which it recovered and built a brilliant country around it, Japan, and multiple other situations. I think for me personally, if India is in a bubble, and I hope it is in a bubble like Naveen says, and it goes through casualty, that will be the real trust, real check of character and guts in we entrepreneurs who are building companies in here. And if we can survive and build amazing companies, India will possibly become equal or more successful than all of these countries that went through casualties. So I think that's my personal belief.
Whether we are in a bubble or not, of course, the future will tell us. But I think all of us who've gone through many different cycles over the years, we recognize that that's the takeaway, that everybody has around these funding cycles. And so one day, the kind of funding that we are getting right now is certainly going to diminish. And at that point, if you don't have the cash to be able to get through to the point where you're cash positive, that's going to make things very, very difficult for you. So that is a lesson that I think all of us who've survived multiple of these funding cycles have learned. So that's the word of caution that I would have. But Naveen, please add.
I think you're absolutely right. I think if people confuse the bubble with saying we will spend a lot more money to build the same kind of a business, that's stupidity. There's no other word for that. And I think if that starts to happen, and that may happen because of the bubble, that is effectively what causes the bubble. It's not if people remain to the fundamentals of the business, you'll actually amazingly build big businesses because there is a bubble.
Excellent. Now let's turn to the third question, which is, would you list your business in India? That is, when you go for an IPO, when you go out and get a public listing, would you be willing to list in India, or would you be looking in New York or Singapore or some other market?
Jayant, that would all depend on what we hear at 6 o'clock, whether we'd be able to repatriate those funds to our... But jokes apart, of course, I mean, we are proud people of Indian origin, and if we had a chance, we of course would list our companies in India as well.
Thank you.
Totally agree with Arun. If the policies are right, India is the place for us. Our business is completely centered around India, and it would make no sense for us to go out of the country.
Yeah, I think right now, as we stand, I think India's markets need to be upgraded quite a bit to be able to attract, to be able to raise large amounts of funds. I think apart from that, absolutely, I think we would love to raise funds in India from the public market. Reason being that we are in India, and the retail investors or the investors here will understand our business much more than anybody else, and will understand the value of our business in the local context much more than anybody else. I think absolutely India is definitely our top choice.
Well, thank you for that. But Sachin, one of the factors that you will certainly be thinking about, and I think we will be thinking about from a market regulator and policymaker's perspective, is if indeed you list at, let's say, $20 or $25 billion market capitalization, You have to remember that the largest listed Indian internet company today, Naveen, you probably know as well, is InfoEdge, I presume.
Yeah.
And InfoEdge is a market cap of about $2 or $3 billion.
Yeah.
So right now, for our markets to absorb a $20-25 billion market cap internet company is a real question.
Yeah.
As well.
No, I think that's a real question, and it will require policy. It will require.
I'm not sure that it would require policy as much as investors on the other side.
No, I think another aspect I think I would like to point out is that it may not be actually bad thing if a lot of foreign money comes because of companies like Flipkart or others actually listing outside of India as well. I think somebody once told me that we are not going to get rich if we keep trading among ourselves. We need to be able to attract foreign capital as well.
So maybe the answer to our current account issues might very well be a listing of Flipkart and have them attract $5 or $10 billion worth of foreign capital.
Absolutely.
Sure, that was a short point.
You took my point away, both consultants sitting next to each other. So I think the problem here could be that the kind of growth they have and the kind of valuations they have, and can that kind of money come in only from India? Can the local market absorb that requirement? But having said that, the positive is that these are the people who use these services. I mean, we all would have put money into companies where we have not used services. But the benefit of this overall entrepreneurship ecosystem is that the people who are going to buy their stock know these companies as their service providers. So that could be another angle why they could consider listing here. But the challenge is what you said very, very aptly is a big challenge, which I personally feel.
Jen, this is the one where there is a huge dichotomy. The way things stand currently, there is I think it's close to impossible to list in India. But the dichotomy is because of the fact that you belong to India and that you built a company in India or from India. That creates a huge emotional component to trying to list in India. The point around whether the markets are ready in India or not is clearly a valid point, and I don't think it's ready right now. I don't think it'll be able to absorb a number of internet companies that might go public in India, over the next 5 years or so. And therefore, foreign money coming into India may not be such a bad option.
No, I think you're right, Naveen. I think if indeed some of our landmark signature unicorns, for instance, were to consider listing in India, and of course we'd be prepared and willing to work with you all to find out what the issues and challenges are and try and overcome them. As you know, SEBI recently did quite a bit to streamline and simplify the listing norms for startups. But if there's more to be done, of course we do that. But at the same time, having companies like yours and Sachin's list would also be a real booster shot for our equity markets as well. So while I was being half facetious about the current account deficit and attracting foreign capital, it's almost as important for us to attract more domestic capital in the equity markets as well. And the kind of excitement and energy that will come into our markets when companies like the ones that are on this dais talk about a listing in India would, I think, really be very, very positive for our country. So आपने कहा कि आप देशभक्त हैं, तो मैं उस देशभक्ति का थोड़ा फायदा भी उठाना चाहता हूँ. देश के लिए भी आप लोग कुछ करिएगा तो बहुत हम लोगों के लिए लाभदायक होगा. Ritesh.
Great points, Jayant. I think I have two views there. One view is, like Son-san said earlier, that there's no hurry. We still have a long way to go. Our country is going to see significant growth in the infrastructure that needs to be created in hospitality. So I think still a long way to go for that. But for me, I would personally love to list in India. Of course, there are questions of policy, equity markets, FIIs, all sorts of things, which I think I don't understand a lot about. But I think in general, the only reason why I will feel very excited about it is because the consumers who have fallen in love with our brand, the hotel owners who are making a lot of money with us, I would like them to own shares of OYO. And for them to subscribe to the shares, it's the easiest if it's listed in India. So I think I would personally want that and would love to work at relevant point of time with the relevant authorities to figure out how to do it.
Excellent. Well, thank you. We, I believe, still have another 5 minutes. So why don't I do another last round of questions, if that's all right with the panelists. So, the final question I'd like to ask all of you, which is that by and large, you have been funded primarily by foreign venture capitalists. In your case, Arun, it may be a little different since, you might have been funded in the Valley. But one of the things that we are trying to address from a policy-making perspective is to strengthen our domestic venture capital industry and have a deeper pool of domestic limited partners as well. Today, 90% of the funding that's coming in for startups in India is foreign venture capital. Do you think that building a domestic venture capital industry, domestic high net worth individuals, angels, is that going to change the nature of innovation? As you change the nature of financing, do you think that's going to change the nature of innovation as well in India? Will we work more on Indian problems and perhaps not so much on global or problems that are well known around the world? What would be your view on that?
Yeah, I think it's not only going to change, but it's essential that it change. And for a couple of reasons. One is, as I pointed out earlier, I don't think every entrepreneur, every startup, or every young man or woman in this audience who's going to start a company will be able to go and raise venture capital from institutional investors. And in the Silicon Valley, when we have to go start our companies, we go to our friends, we go to our neighbors, we go to our colleagues, we go to anybody who could actually put some money in us. And so it really is, and that money has to come from our local investors. We cannot, go and look for angels in other countries. So we definitely need to start from the angel network and then work our way up. But the money has to come from, local people.
So let's try and do this quickly because I know we'll run out of time.
So very quickly, when we go out and pitch to investors in Hong Kong, Singapore, US, one of the examples we give is like in China, that way in India. But the fact is that the Indian consumer and a lot of things about the Indian industry are different that Indian investors are more likely to understand. So yes, definitely getting an Indian domestic high net worth individuals or an angel network or even a VC network going, very, very beneficial. New ideas will definitely come up.
Good.
I think it's already happening to a certain extent. I think, for example, I have started investing in startups almost on a regular basis. I meet companies. I think a lot of people have gotten interested. It's about understanding. There are enough number of people now in the market who have the funds as well as the understanding of the internet space to be able to do angel investing. Yes, I think it's not gone to a level where Indian companies can raise $50 million, $100 million or so from Indians yet. I hope, I don't know what needs to be done for that, but I'm hoping that over time it will get solved on its own.
Quickly, commendable, Jayant. I think you're seeing a kind of an infectious culture of risk-taking in investments, because you see corporates now carving out funds for incubating startups which are adjacent to their business. So like that far faster is what I believe.
Yeah, that's an excellent point.
Yeah.
I don't think there is any other way to solve for all the very deep-rooted problems of the country unless until the money is coming from the local LPs. A lot of the problems and investments that have happened in companies that have a very broad-based business models, which are globally acceptable business models. So whether it's advertising, whether it's e-commerce, whether it's payments, they are very globally accepted business models. I think there is a huge wave of investments that needs to happen if somebody were to solve for problems, let's say very very deep-rooted on let's say on education, on healthcare or security, and those solutions are not solutions that have existed elsewhere. So if the investors are not local, they will not be able to appreciate what the solution is going to look like. Today, if you look at a lot of the companies that have been invested, the business models are compared between here, China, and the US. Tomorrow, those business models will not have that comparison. And the only reason those business models will get invested and funded if there are local investors investing, local money getting invested in those. Personally, for example, just like Sachin, I would have done like 25 investments. Half of them may not be the models which are generalized across the globe. They are very, very localized to India. And because one can appreciate what that business model would look like, and therefore one would essentially do it. And my favorite one, which I recently did, was somebody essentially said, how do you get, somebody is basically doing a business and saying, how do you get local mithai, which are famous in different parts of the country, and how do I get them distributed all over the country? So that if I'm living in Bangalore and I loved the Taggu ka laddu, where I'm from Kanpur, then how do I get Taggu ka laddu while I'm living in Bangalore? And those are business models which I don't think are necessarily possible unless and until you are a local investor.
Terrific.
I think I have a view where I think there's a little bit of a problem in terms of the risk-taking appetite around. And I'll give you an interesting example. It was on our table itself when Sridhar said that he's going to invest in a smaller company, but not on Flipkart and a 15 bill or 20 bill value. I think if China's largest e-commerce company can be 200 bill plus, there is absolutely no reason why India's leader in e-commerce, or whoever is the leader in the future term, is not $50 or $100 billion in value, and 3x or 4x return is massive, right? So I think someone like Sridhar, who would have a wealth manager, should effectively be putting money in Flipkart himself, instead of saying that I should be putting small money in terms of that perspective. So I think it's important to make really, really big risks, because India's largest, if you were to think about it, of course, internet company, okay. I think there's a lot of aspiration there.
Well, thank you, all of you. And of course, we have to end the panel now because the Honorable Prime Minister is awaited shortly. We've had a very, very interesting discussion. I'm very glad that you have,
Thank you. Thank you, Sri Jayant Sinha. Thank you very much. We have a small token of our appreciation. We'd like to request everybody to remain seated. You cannot leave the hall at this point because you won't be able to come back in. We have one request. If those of you who would need a Hindi to English translator headset, please raise your hand. There are a few hundred of them here, and we can get them out to you. Can we have the translator headsets put out, please? They'll come around. Just give us a second. Can we have the startup videos while we're doing, so a couple of them?